Good afternoon, everybody. Welcome to our lunchtime keynote at today's NYU REIT M&A Symposium. I'm Adam Emmerich, co-chair with my partner, Robin Panovka of the NYU REIT M&A Symposium. Very pleased to be here today with Hamid Moghadam, chairman and CEO of Prologis. We're thrilled to welcome all of you here today to what would and is be our 25th annual symposium. Those of you who've been watching The Crown will know that the 25th anniversary is the Silver Jubilee. So it's exciting to be here, albeit virtually. This year, as has become our tradition, and of which we're very proud, the symposium features what really is an extraordinary group of speakers representing what we think are the brightest minds across all facets of the REIT industries, executives, founders, bankers, lawyers. We have them. So please check on all of the panels that are coming up and those that you may have missed, which have already occurred, which you can catch on the replay. Speaking of all-stars in the REIT and real estate world, there's frankly really no one who's done more for REITs and real estate, has a more impressive record in REIT M&A than Hamid Moghadam. We're in for what I'm sure will be an exciting and informative conversation, and I only wish all of you could be here in person. I know we can all imagine the hustle and bustle of sitting together in the wonderful room at the Pier overlooking Central Park, the first buds of spring arriving, having the chance to catch up with friends and colleagues, to interrupt me, to ask the questions that you want to ask from the floor. And we're not going to talk today in the session with Hamid too much about the future of the travel and lodging industry, but I, for one, despite the efficiency of being here via Zoom from our home offices or our actual offices, able to zoom on to the next thing 1 nanosecond after this is over, couldn't be looking forward more to next year's REIT M&A Symposium when we're back together in person in New York City. I don't want to deprive you of the opportunity to hear directly from Hamid about Prologis and the history that has brought it to where it is today, and the size and preeminence that it's achieved. And so I'll just say that Hamid founded what was the predecessor of of Prologis, which was AMB, very soon after graduating from the Stanford Business School in 1983. And he led it through its initial public offering in 1987, which was just 1 year after our first REIT M&A Symposium, and its mega merger 10 years ago with Prologis, and much more M&A besides, which Hamid will have a chance to tell you all about. Hamid has been a trustee of Stanford. He remains very active with the university. He served as chair and a member of the executive committee of the Urban Lands Institute, chairman of NAREIT and REITPAC, and is very active in many other civic, philanthropic, and business organizations. Hamid, you and your company have been really a ray of sunshine in so many ways, going from strength to strength in your business and in the equity capital markets and the private equity business you're involved in. I won't rattle off all the statistics because you'll do a better job of describing the company and what it is today than I will. I'll just leave it at that to start off with, and also mention, and hopefully we'll have time to talk about this as well, your personal story and your career are tremendously inspiring. So I'm sure especially the students who are joining us will be interested if we have some time to talk about that. So let me just start off with the most broad-based question for you possible, really. For those people in the industry and the audience, few as they may be, who aren't intimately familiar with Prologis, if you can tell us really sort of the overview, what you do. Is it fair to call you an industrial warehouse business? What's the story of what Prologis is today?
Sure, Adam. First, I want to just say good morning here in San Francisco to all the participants, and I look forward to doing this session with you. I also want to be careful that this is more a dialogue about the industry and not an advertising for Prologis. But since you asked the question, let me give you the basics. Prologis today is a global logistics company. We have about 1 billion square feet of warehouse space around the world, and that's 19 countries on 4 continents. We have about 5,500 customers, unique customers. And embedded in the business, we have a $50+ billion private capital business. We're an active developer. We do about $3 to $4 billion of new development every year. And I think probably the most interesting thing about the company is that 2.5% of the global GDP actually flows through our buildings in any given year. So it's gotten to a scale which really gives us a window on what's going on in the global economy, at least the goods economy more than the services economy, but pretty big slice of the economy. The other interesting thing is that our top 25 customers account for only about 20% of our business. Our largest customer is Amazon. I believe we are their largest landlord by quite a distance. But even they only account for a little over 4% of our total holdings. And if you, as I said, if you add up all the 25, they're less than 20% of our business. So it's very diversified, and our customers include pretty much anybody in any business. So we get a good window on what's going on around the world.
Is that, I mean, have you kept track of that figure, the 2.5% figure over the years? I mean, obviously you've grown as a company, your footprint and your square footage. Is that number, do you expect that number to get to 10%?
Well, that would be pretty ambitious because that would mean we would have to be about 5-6 billion feet of space. And frankly, I don't think there exists 5 or 6 billion square feet of high quality industrial space around the world. So I think that's unlikely. But yes, we've kept track of this figure for the last 6 years. We originally had a study done by Oxford Economics to actually come up with that number because we were curious ourselves. And then over the years, we've asked them to update that figure. And you know, it's we're not active in every economy in the world. So if you look at just the 19 countries that we're active in, it's actually 3.5% of the GDP of those countries. But we're only active in about 70% of the global GDP, countries that represent 70% of global GDP.
You talked about development. Can you, I mean, it's people generally think development is hard. A lot of REITs have stayed away from development. You've obviously been very active and been rewarded for it. Can you tell us a little bit about your development process and how you've succeeded so well with it?
Sure, I'd be happy to. We've done we actually looked at the figures since the year 2000, which is as far back as we could go with the numbers. And we've completed almost $40 billion of development during that period of time. And interestingly, we have the returns and performance and all that on that stuff, but that's a little off topic. So in our business, you pretty much have to be a developer. And the reason for it is that if you have a customer-centric approach to the business, which we do, and it's probably the most important thing about our company, then at any given time, our portfolio is 95-96% leased. So we only have 4 to 5% of our inventory to actually service the growth needs of our customers. So if you don't develop, you basically don't have much product to sell to your customers, and you lose market share. So our development is very customer driven. That doesn't mean that it's all built to suit. Today, about 40% of that activity is built to suit. But we generally, we exclusively are active in areas where our customers want to be. And because of the scale and scope of our relationship, we have insight as to where that's going to be. So pretty active developers. And frankly, if you follow a customer-centric approach and you're a developer, you have to be global because the customers are global. This is not like you're servicing in the office business, maybe an American law firm or something. Our customers move boxes from part A to part B, and that's usually across borders. So we have to be global. If you're global, you have to be a developer because modern logistic product doesn't exist in a lot of these emerging economies. So it all sort of ties together. The fact that we're focused on logistics, the fact that we're customer centric, the fact that we're an active developer, and also the last piece of the puzzle is the private capital business. Because we're active in so many different currencies, we have to, and we are a US dollar dividend payer, we need to be mindful of not getting upside down with currency. So we bring in a lot of private capital in our activity around the world.
In terms of development, what are the lessons you've learned in different countries sort of applicable, or is each country its own universe of complication?
Well, I think development is primarily about three things, right? Is having the right land and having the entitlements that go along with it, the ability to design a product and get it built, and ultimately having the customer demand to lease it. The customer demand is the smallest problem. There's plenty of customer demand, particularly for these economies that are sort of entering middle class as their populations are getting affluent. Consumption sort of skyrockets when they hit middle class. So there's plenty of demand for these things around the world. The challenge is getting the land and getting it entitled. And those challenges are different in different countries. For example, in Japan, the rules are very clear. You know, everything is got a very clear process and an outcome, and you know, it's pretty straightforward. You can underwrite it perfectly. In Southern California, it's a different story, or Northern California, California anywhere, or increasingly around jurisdictions around the more affluent countries, educated populations. They really don't want warehouses in their backyards, and because of the traffic and the trucks and all that, they want their Amazon deliveries the next 5 minutes, but they don't want the trucks that bring them over to their house. So I've never been able to quite figure that out. But so entitlements is increasingly a critical issue. In Europe, entitlement is more straightforward in most places, but the government in many countries controls a lot of the land. And they meter it out based on their economic policy as opposed to necessarily forces of the marketplace. So in every place you're dealing with a different environment. And with respect to building specs, that's pretty straightforward because the specs are not consistent from market to market. Some markets are multi-story, some markets are single story. The means and methods of construction vary. So there are differences in every place, but the fundamental customer focus remains the same everywhere.
I mean, you mentioned a couple of times customer centric, which sounds like sounds obvious, but can you tell us what that means in your business?
I don't think it's actually obvious in the real estate business because, you know, most real estate, including the early parts of our career when we didn't have the scale that we have now, it was always about the next deal. And still to this day, people want to talk about their next deal. We like to talk about our next deal too, but frankly, when you're running 1 billion square feet and over $150 billion of assets, the next deal, even though it could be $1 billion deal, is not going to necessarily move the needle that much. But how well you leverage your platform, if you can eke another 5, 10, 15% of value out of your real estate and meet more of the needs of the customer, and we can get into what that means, you can really make a lot of money because everything on the margin is extra revenue, extra income, and oftentimes doesn't require the investment of a lot of capital. So that's where I'm focused, is how do we put the customer in the middle, in the center of our business, and try to address as many of their needs as we can. Let me give you an example. I mean, in logistics, not too different than office. We hire a lawyer, the customer hires a lawyer, we engage in a 2, 3, 4 week battle with each other. We sign a lease. We don't talk to the customer for another 5 years until we have to repeat the process again. That's sort of the idea of customer service in the real estate world. Well, and then we say to the customer, look, this is a triple net lease. So I want you to take care of my roof. I want you to take care of our loading docks. We want you to pay your own insurance costs. Everything we put on the customer. Well, that's crazy. With our scale, we can procure those services and products on a much more economic basis. And more importantly, take the burden off the customer. Why should the customer have to go figure out how to contract for snow removal or dock maintenance or whatever? We can do all that. So it starts with the very basic needs that you have to operate within one of our buildings. So that's the first series of responsibilities that we are increasingly taking over from the customers. We have something called a clear lease, which basically is a lease that the customer knows exactly what they're paying, and they don't get nickel and dimed for all these little things. And then around that, we've expanded that product offering to include things like, I don't know, forklifts and racking systems and telecom services and IoT and now labor solutions. And so we're kind of putting the real estate in the middle, but taking care of more and more of the needs. I mean, the best analogy is when you go buy a car, you buy a car, right? You don't go buy the engine one place and the wheels somewhere else and the chassis somewhere else and then figure it out how to put it up together. So we're trying to make life easy for our customers and with some success because they seem to be liking what we're doing to help them.
So is that something where the portfolio has been transitioning to a greater portion of, your real estate being not triple net and more, this model that you described?
Increasingly, we started doing this about 4 or 5 years ago. We were actually concerned whether the customers thought that this would be attractive to them because we thought many would be suspicious. Are you really trying to make a lot of money doing this? And are there hidden charges or anything? And increasingly, as they've gotten comfortable with it, we're doing about 75–80% of our new leasing in the form of clear lease. There's some big companies that have a department that deals with those things, so they don't worry about it. But the vast majority of tenants find it much easier to outsource those services to us. And increasingly, we're even going beyond just pure real estate service types of activities and more into, for example, we have a program called the Prologis Community Workforce Initiative, where we're actually training labor to work in these warehouses, because it turns out that that's the biggest pain point for the customers. Probably all boring stuff for a real estate conference where people like to talk about their billion-dollar deals, but we're in a boring business, but I love it. I mean, that's what makes me exciting. And the other thing that makes it exciting is that really, this approach has not been taken in the real estate business, and it's almost inventing a new way of doing business, which obviously is exciting to me and my colleagues.
Do you see competitors imitating you, or is it really a kind of now a moat of competitive advantage that you have because because of the size of the portfolio and as you said, the centralized ability you have to offer these kind of, I don't know what it is, gross is not the right thing, but turnkey services to people?
I don't know. I haven't seen it yet, but I wouldn't be surprised. I oftentimes joke with my colleagues that, we go first on earnings, usually weeks ahead of other companies. And it's interesting how much of what we talk about on our conference calls gets repeated in other presentations. And we've kind of joked about, well, what's going to happen if we go last one time and see what happens? So anyway, I don't know. You figured that out.
And do you think it's logistics, the way you describe it, obviously, the range of services that you're able to provide to customers in your buildings, do you think you'll see it as a trend in other kinds of real estate, or have you thought about that at all, or it's outside of your purview?
Look, I think if you're going to operate well and have competitive advantage in a business, you need to be focused. And sure, we can go into other kinds of real estate, but we were in many other kinds of real estate. And people don't remember this, but A&B was actually very active in the office business. And when we went public in '97, actually a third of our business was retail. And we sold it all in late '99, actually because of a conversation around e-commerce, interestingly, and I can tell you that story if you're interested. But so our business has gotten more focused on logistics over time. Now, being in the logistics business, you can't help but get into some other businesses. For example, some of our sites actually have significant data center potential. Like a lot of our parks around the Dulles Airport area are right around where a lot of this data center activity takes place. And the value lift of taking an industrial building and converting it to a data center is very significant. By the way, the same thing, for example, in South San Francisco, of converting it to pharma and life science space. So and converting it to apartments and converting it to office campuses and the like. So we've done a lot of that sort of conversion business, but we're not in the long-term ownership of that real estate. We create the value either by ourselves or in joint venture with somebody else, sell the product and move on. But we're always in the business of maximizing value, and that usually takes us into other directions other than logistics. But we're not operating those assets for the long term.
I mean, I enjoyed reading the article about your decision from 1999 to exit retail and think about e-commerce. I'm sure I'd love to hear about it directly from you, and I'm sure our audience would as well.
Well, it was a little bit of serendipity. I mean, I met a man by the name of Louis Borders, who was a serial entrepreneur, actually founded Borders Books and sold it to Kmart and all that. And in the late 90s, he started a company that you may remember called Webvan, which was the first online grocer. And we met in 98, and he took me through the whole business plan and Webvan, and it just scared me as to what this vision would be. And so we made two decisions that day. One is to exit the retail business, and it took us about a year and a half to do that. And we completed that transaction in 99. And then the second thing is to invest $5 million in Webvan as a venture investment, because we really wanted to have a seat at the table and sort of watch what's going on. By the way, we could have invested in Amazon, and we didn't. That shows you how brilliant we are. But anyway, and Webvan, the story. They went public. They were probably the most publicized IPO of the late 90s, early 2000s. The company went from nothing to $1 billion in market cap, and then failed within a year because they overexpanded, and the internet was clunky and all that. But nonetheless, the idea was a really good one. There were so many articles that I'm surprised you didn't see about what a dumb mistake AMB had made going into the venture business and losing $5 million. Well, what people kind of missed is that the $5 million was a tuition to learn about a business that was going to be very important in our future. I didn't honestly know how important, but I knew it was going to be important. And all the trouble we saved ourselves from exiting the retail business. So that's where the original idea really came about, and then we started paying a lot of attention to it. And being headquartered here in Silicon Valley, you can't help but be exposed all the time to different ways that people are trying to disrupt various businesses, including retailing. So we've been early in that business, and we watched it very carefully. And, today I would say probably 12-13% of our portfolio is pure e-commerce. Probably another 7 or 8% of it is derived e-commerce, meaning UPS and FedEx and other people that handle things for e-commerce. And probably in terms of our marginal built-to-suit activity, maybe a third of it is e-commerce. So it's clearly become an important part of the logistics business, but not the only part. I mean, it's the part that gets all the headlines, but the logistics business serves a wide array of industries, including retail, regular retail, and including e-commerce. So anyway, that's the story.
What's the future for e-commerce? I mean, and also what's the impact of the pandemic been?
Well, the pandemic, like many other things, has accelerated the gain in the share of e-commerce as a percentage of overall retail sales. The numbers vary by country. For example, e-commerce is a much higher percentage of total retail in China because they don't have organized retail to the same extent that we had. So they built it the way it should be built, from scratch, as opposed to trying to build it around a very mature retail business. So e-commerce could be in the mid to high 20s in China. It was in the low teens in the US as a percentage of total retail before the pandemic, and it went into the mid 20s in the first few months of the pandemic. Now it's around 20% of the overall retail sales. But what makes it exciting for us is that this going through an e-commerce channel takes 3 times as much space as going through a retail chain, because it has to travel in a parcel as opposed to a pallet. And that takes a lot more space, and you need to deal with the returns and all that kind of stuff. So it's e-commerce is really triply good for logistics, because it's just more space intensive than, because there's a lot of logistics real estate involved in regular retail for sure. But the same stuff going through e-commerce is 3 times as space intensive. So it's been a good tailwind for our business. I think that percentage would have gone to this level and higher. It's just that the pandemic forced it into a much shorter time frame. I think when the economy opens up, you might see a leveling of that penetration percentage for a little while. I think people who've been cooped up for over a year are going to want to be more in the experience economy, if you will, as opposed to the goods economy. They're going to want to get out there and travel and do all those things. But we have now introduced a generation of shoppers to e-commerce, particularly older people that weren't big fans before, but now they know how easy it is. And I think we'll just kind of keep growing off a higher base. And as to the ultimate penetration of e-commerce, look, I've talked to a lot of people who know a lot more about this stuff than I do, and the numbers vary from a low of 30 to 40% to, there was one Sequoia partner that I talked to who thought there was going to be 100%. No, I don't think it will be 100%, but I think it will be pretty substantial. And I think that the other thing that will happen is that the distinctions between retail and logistics are gonna blur, because at least with respect to the supply chain, all the way to the store or to the last touch delivery location, the supply chains are pretty much the same supply chain to a large extent. It's really the last couple of steps in the distribution that vary between retail and logistics. And I think you'll have shopping centers, doing e-commerce and people picking up at the curb like they do now. And I think there are going to be a lot of hybrid models that will emerge.
And what about all the retail space that, the US famously has so much of as compared to anywhere else in the world? Do you think we'll see conversion of that? Are you looking at converting some of that space, working with current owners or buying space to convert to logistics or other uses?
Yeah, so the answer is yes to all of the above. And we've done actually a fair amount of research. There's a paper on our website, if you're interested to read it, about that very topic. But it's a lot harder to do than it appears at first glance, because there are all kinds of regulatory entitlement issues with respect to municipalities not wanting to lose the sales taxes, municipalities not wanting the congestion in the neighborhoods, neighborhood opposition. There are all these REAs in these shopping centers and co-tenancy agreements that make it very difficult to change the uses, at least for the big boxes. And then there are economic barriers. I mean, it's going to take an enormous amount of capital to convert some of these things. So we actually think it's an interesting opportunity, but a relatively small opportunity. Having said that, I think a lot of retailers will do e-commerce out of their existing boxes, maybe not as efficient as having a pure e-commerce operation, but in a business that's otherwise declining, it's a good strategy to increase your sales. So I think some of that will happen on the curbside as opposed to delivery to homes, and they'll be increasingly hybrid.
And does your portfolio of logistics real estate dovetail with that in the way you described, other than that the last mile is different? I mean, are you working with retailers to do that last touch activity for them as well?
We are in extensive dialogue with major owners of shopping centers, but as you go through these portfolios, you pretty much have to look at 100 assets before you can come up with one that's a candidate for this conversion, because of all the issues that I just mentioned. So it's a tough thing to do, but I want to just make this very clear. The issues that retail is experiencing today have very little to do with e-commerce. They mostly have to do with the first point you made, which is that there's just too much retail in this country because we did format after format after format and never took the old stuff up. We have about, I think this number is right, 5 times square footage per capita of retail in the US as compared to Western Europe with the same level of affluence. So, and the other thing I want to be very clear about, I think really good retail and really good retail companies will figure out how to make money out of their assets. It's just going to take time and capital to accomplish that.
Mm-hmm. You spoke, just to sort of segue for a second, you spoke before, obviously very eloquently about development, and you touched briefly on M&A. I think I said in the introduction that there's no one who's been more successful in M&A than Prologis. So can you tell us some, maybe with the AMB deal or some of the other mega deals you've done over the last few years, sort of what's your secret sauce in M&A?
First of all, it'd be interesting for you to know that AMB never did a major M&A deal, public or private. We just didn't. Prologis, on the old Prologis, on the other hand, bought a bunch of companies. They bought Meridian Industrial Trust, and they bought Catellus and KTR, and, Keystone, and a couple companies in Europe and all that. So they were serial acquirers of companies. And we on the AMB side didn't do any. And of course, at the end, we did the Prologis deal, which was all those other companies plus Prologis. All
you let them do it for you.
Then then since the merger, which you were very involved in, we have done 4 big M&A deals, 2 public and 2 private. We bought KTR fund management portfolio, essentially, which was a series of funds. That was about $6 billion. We did DCT, which was just under $9 billion. Then we did Liberty, which was about $14 billion. And we did IPT, which was about 4. So total about $31 billion real estate. We're getting very good at extracting the cost synergies out of these businesses. And it's really because of a huge investment we've made in technology and processes. And we can get the stuff done in literally a month or 2. I mean, that's how long it took us to integrate the last couple of companies. So it's a machine now. And I think that, and then the second step is to deal with the non-strategic assets that we get as part of this acquisition, because 100% of the holdings don't fit with our strategy, and we're pretty picky. And we've been in a really good environment for selling logistics assets. So, beauty's in the eye of the beholder, and the stuff that doesn't fit our portfolio may fit somebody else's needs very well. So we've kind of worked our way through a lot of them. We've done about $16 billion of disposition since the merger, which is a staggering number. I mean, that's bigger than most REITs. So yeah, we've gotten pretty good at it. But the most exciting thing about these M&A deals are the revenue synergies. Because as we talked about earlier with the extra products and services, if you can squeeze $1.20, $1.30 of juice out of $1 orange, to use that analogy, then you can extract that kind of juice out of somebody else's orange as well that you acquire. So generally the playbook is that we get the premiums that we pay back in terms of cost synergies, and then the revenue synergies over time are the big driver of growth for our business, which has been substantial. I mean, if you look at, again, I don't want to do advertising in this, but if you just go do the numbers on our growth rate in the last couple of years, while deleveraging substantially, it's been multiples of not just other REITs, but also other logistics REITs.
And is that going to, you think that'll be something you'll be able to continue to do, or is there just a lack of these, huge collections, even taking into account the stuff you don't want, you have to get rid of? Are there targets out there that are going to let you continue this trend?
There are always targets out there, how big they are and how attractive they are in terms of how much of it you need to sell over time, et cetera, et cetera. And of course, all the social issues that you know better than I do that get in the way of some of these things. But yeah, there are targets out there. Obviously, the targets are diminishing every time something happens, and we're not the only ones active in the space. There are obviously other people active in the space as well. So I think it's getting harder, and there's not an infinite supply of really quality logistics out there. It just happens to be very popular today. So, but not all logistics that's out there fits our strategy or needs. We are really a big market owner, primary market, big consumer populations, et cetera, et cetera. And there's a lot of perfectly good logistics real estate in smaller markets. It's just not our thing, and it serves a different purpose. It serves more local distribution and the small and medium-sized businesses.
Mm-hmm. You talked about the upward impact on e-commerce trajectory as a result of the pandemic. Other than that, which is obviously a plus, it sounds like for you and the company, are there other big lessons? I mean, you talked about your global footprint. You talked about serving the same customers all around the world. Is the pandemic basically a hiccup or positive even in a way for on the e-commerce side? Are there other lessons? You think we'll have less globalization, less complicated supply chains that will impact you? What else? What should we take away from the pandemic when we're thinking about, the world economy generally and your company in particular?
Yeah, I think there's another really big thing happening as a result of the pandemic. I mean, the problem existed before the pandemic, just made it more obvious. And that is that our supply chains have been so stretched and fine-tuned for efficiency that they have no resilience. If something happens, then the whole thing breaks down and companies lose sales, and that's a very expensive proposition. You may pick up a few dollars of savings by having a somewhat more efficient supply chain, but if you don't meet your customers' needs and lose sales, then that doesn't make any sense. So supply chains are getting more resilient, and as a result, people are carrying, to our estimation, will have to carry 5 to 10% more inventory. So this trend of declining inventory to sales, which has been going on for 50, 60 years, has definitely turned a corner. And now people are carrying more inventory per unit of GDP because of that resilience. I mean, just look at what happened in the Suez Canal a couple of weeks ago. I mean, there are 300 ships backed in there, filled to the brim with containers that are going in and out of Europe, right? So, or right now, as we speak, there are hundreds of ships stacked trying to get into the ports in LA. Why? Because all the empty containers that got here never could get back as a result of the pandemic. So, yeah, the world. Look, I don't listen to politicians. I look at numbers. Everybody talks about onshoring and yada yada yada. Just look at the numbers in the last 4 or 5 years. Our trade deficits are bigger. Our volume of trade is bigger. Everything's going up. Sure, there will be more onshoring of manufacturing of PPE and some certain kinds of pharma and really important things onshore. But fundamentally, I think we live in a globalized economy. And by the way, if it really went onshore, everything went onshore, great. Our business is actually driven by consumption. And if more production needs space in the US, we're happy with that because China and the other places have their own consumption to worry about in terms of the need for space. So a lot of people have, in my view, mistakenly made a big issue out of this, and they need to just look at the numbers. So yeah, there's a lot of talk of America first and national policies and all that, but just watch the numbers, follow the money.
Interesting. What about work from home? I guess that won't impact the logistics business per se necessarily, but how is it? How, in terms of the company itself, your experience as a company leader, what lessons have you drawn from that?
I honestly, for me personally, I'm more productive because I'm not spending as much of my life on a plane and traveling. Now, there are downsides. I mean, definitely the thing between the separation between work and play, if you will, gets blurred, and generally there's less play. And I don't think this situation that we're in is sustainable forever. But I think on the margin, once things open up, speaking for myself, I plan to take a more flexible approach to work, and I certainly plan to travel less than I was before, because some of these tools, while not ideal, there a lot of meetings that we got used to having are really can be done much more efficiently on Zoom or something. So it's not going to be a one model. I think it's going to be a hybrid model. If you were going to ask me to guess at what the man days at the office will be, or person days, I should say, will be at the office, my guess is that it will be somewhere between 3 to 4. If it were 5 before, it will be 3 to 4 now. Very few people will be 5 and 0. Very few people will be 0 and 5. And I think most people will figure out a way of working from home or somewhere else a day or two a week. That's
Lawyers just hope it's not 7 and 0.
Well, yeah, you can adjust the numerator proportionally for whatever number you want.
We could go on and on. I'm a little conscious of time. I'd like to ask you a couple of questions, if I may, on your career and your life. I mean, you have had an interesting and fascinating career. You were studying at MIT when the Shah fell. Your family situation changed. You've obviously succeeded fabulously here in the U.S. Is there one thing you would tell people about your career and about your life that might help them in thinking through how to manage their own lives?
I would definitely say, first of all, I think building a company, you're talking to me, so it's all about me, but it's not all about me. It's about all the great people that have worked at the company over the years, starting with my original partners, who are really wonderful people, and A&B and Prologis would not exist, obviously, without them. So I just get to take credit for a lot of good work that a lot of other people do. And I don't mean that as a platitude. I really mean it. And in fact, my advice to any CEO is that, not that you asked, but that culture is the only form of sustainable competitive advantage. I really mean it. People can copy how you do your business. They can copy your capital structure. They can copy your buildings. They can copy everything you do, and they do. But the one thing that's really hard to do is to build a culture. And I'm not suggesting by any means that our culture is perfect, but it's probably the one thing that I spent a ton of time on, and always experimenting and always sticking to some very basic values that we've tried to uphold. So that would be my advice to other leaders. With respect to advice to students, I would just tell them to take more risk early in their career. And it does not matter what your first job pays. Join a good company and work for a great boss. Those are the only things that matter. Because if you're in a good company and you're working for a good boss, you'll figure out your way around that company and you'll get to the perfect job. And you will be rewarded for that in time. My first job paid less than a third of what the average Stanford MBA made in 1980. I did okay, but because, and I didn't know this, by the way, I just totally blocked out. But it's pretty clear that working with the right people in the right environment is the key to getting that boost in your career. And learning is really important. The job that you can learn the most about is the job I would go for in structuring the career. And the other thing I would say is that being an entrepreneur is very fashionable these days, and particularly in the context of technology and all that, less so in real estate. Real estate has become less entrepreneurial, actually, if you think about it, because a lot of the 2, 3, 4 person partnerships that we were all used to in the 70s and 80s are now replaced with big mega companies and the like, and institutional capital. So real estate has gotten less entrepreneurial. Other stuff has gotten more entrepreneurial. But being an entrepreneur is tough. It's really, really tough. And I'm really glad that I had the good fortune to do it. But frankly, if I knew how tough it was going to be, I may have not done it. And so it's not. You only read about the success stories. Nobody writes articles about the ones that don't work, and it's just tough. So anyway, that's my advice.
Is there a job or an industry or a part of the real estate industry that fits that profile today? I mean, obviously the culture and the good boss and the learning, I get all that. But if someone says to you, okay, I'm choosing among, I have those criteria firmly in mind. I'm not going to deviate from them. But where should I go? I'm just got my Stanford MBA. I don't care what my first job pays. Where would you tell them to go?
I would tell them to go to the place where they get up every morning and are excited about it. I think this business of trying to figure out what industry over the course of a 30 or 40 year career is going to be the perfect place to be, it just doesn't work. Look, when I was coming out of school, the career, the degree that you wanted was a petroleum engineering degree. Okay, so you just can't run your life that way. You got to go do something that gets you out of bed and excited every morning. And in pretty much every business, there's an opportunity to build a great company. You just need to figure out how to do it a little bit better and around the edges. Even in a declining business, okay, like the railroad business, there are good opportunities. So, so I think it's much more important how you feel about a business and how excited you are about it and how much you apply yourself to it than necessarily the business. If you have the good fortune of being in an industry that aligns with your interests, that has a big tail on its back, great. But if you're just looking for what's going to top tick the market for the next whatever decades, that's really hard to predict.
Yeah, no, it's excellent advice. Hamid, I can't thank you enough for having Zoomed in with us today. As I said at the beginning, I probably will also join you in traveling less when all this is over, but I'm looking forward to seeing you in person. I know that if you'd been here in person with all the people who aren't all together here in person, would have been even more fabulous to have the chance to spend some time together. And just super appreciative of your joining us and supporting the NYU REIT Symposium as you have for so many years.
It's a pleasure, and it's always great to talk to you. You played a very important role in the success of our company. So anytime.
It's very kind of you to say. Thank you, Hamid. Thanks again, and thanks to all of you who are watching this, whether on replay or eventually. We appreciate your interest. Thank you so much.
Thank you.